In this presentation, we will record journal entries related to wages, both direct and indirect, within a job cost system. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Information will be on the left. We're going to enter that into our general journal, then post it to the general ledger. General ledger being used to create the trial balance. Here is our trial balance. It's in order: assets, and then liabilities, and then equity, income, and expenses. We, of course, are focusing in on the asset accounts, more specifically the inventory accounts, as we take a look at the flow of a job cost system. What we're doing here is looking at the wages that are paid to people that work in basically the construction of whatever we make. If we're making guitars, in the construction, if we have construction jobs within the construction process, the people that work directly on that, as well as the people that work indirectly, we're going to have to sort those two out and record this information. To understand this, we first need to think about that we're really kind of just processing payroll here. We're processing payroll to people that work on the jobs. If they work in the factory and they're making guitars, they work in the factory. We're processing the payroll. Now, when that happens, typically we think that the journal entry, if we take out all the withholdings, we're not going to get into payroll withholdings and whatnot, but if we think about the simplified transaction of a payroll transaction, it would be we're paying someone, crediting cash. We instead are going to make a payable, wages payable, and then the debit traditionally we would think would go to wages expense or something, some type of expense. In this case, that's of course what the difference is going to be, and it takes a little while to really understand that. This is going to happen a lot in a job cost system because we start to memorize, if we've worked in other types of industries, a service company, merchandising company, that every time we have payroll, it's just going to be wages expense. But in this case, that's because of the matching principle. Before, it used to be that we used those wages in order to help us generate revenue in the same time period. And this time, where they're not generating revenue yet, they're making an asset, they're making inventory. So that's the first thing we need to realize. We're kind of processing payroll, but it's going to look different, and we're going to have to just basically unlearn if we just memorized kind of the payroll journal entry, which is to credit cash or credit wages payable and debit the expense. We're not going to debit the expense because it's not an expense type. What we're going to have over here is the jobs that they worked on, and that's what we will have to track. So let's take a look at that real quick on how that might happen from a forms basis, just an example. So we're going to go to the right over here, all the way to the right. And we're going to have something like a time ticket, of course. And the time ticket is going to give us an idea of the jobs, the people that worked, the jobs that they worked on, so that we can track what job is being worked on. So just note that we're going to need some type of system within a job cost system to track which jobs are being worked on, so that when we process the payroll, we can process it and select the correct account to hit, which is going to be the correct job account when processing their payroll process. So this individual worked on job B15, and that's where we need to apply the expense of the wages we're going to pay for this individual. Note that this could happen for a company that makes stuff or for a service company. Like a service company, like a bookkeeping company, may have a job cost system in a similar fashion. Also note that here we're applying out the actual cost. If we work in a bookkeeping company or something like that, or a law firm, we may have a billable rate for people that might be different, meaning we might make our invoices using some type of billable rate that's different from the actual pay rate. Or we might make our invoice with what we actually pay an individual and then mark it up, use some kind of markup in order to record it. Here, though, we're tracking the cost to the inventory, the cost to the job. So we're really using the actual number that we pay employees here. So I'm going to go all the way to the left again. So I've scrolled all the way back to the left. Now that we've just seen the documentation that might be used to create this, we're going to just look at the jobs here. This is the jobs and the direct labor that we are applying to them, which we're putting together by basically tracking as the employees work, typically in a database program of some kind, what job they worked on. So job B15, we've got 1,200 that's going to be applied for direct labor. Job B16, 900, B17, 560, B18, 850, and B19, 690 for a total of 4,200. So the journal entry then is pretty straightforward. We don't need to break it out for the journal entry, but we do need to break it out for the supporting documentation in each job. So the journal entry, we're just going to use this total here. It's going to go into work in process. And that's going to be kind of the confusing thing here because, again, typically we would think of it as an expense. Here we are using these wages in order to help us generate an asset, which is going to be inventory, which is represented here by unfinished work in process. So it's a debit balance. We're going to make it go up by doing the same thing to it, another debit. So I'm going to right click and copy. We're going to put this in B10, right click and paste 1, 2, 3. The amount in C10 is going to be that 4,200. Then we're going to credit something for 4,200. I'm going to use the kind of plug formula of negative of that number and enter. And then we just need to see the amount. Now we could say that we paid cash, but typically a lot of book problems and in practice we may go into wages payable first and then pay it at a later time. So I'm going to put wages payable. So J14, right click and copy. We're going to put that in B11, right click and paste 1, 2, 3, values only. So again, if this was a normal payroll journal entry, for a non-manufacturing company, we would credit wages payable or cash and debit wages expense or something like that. And then we would have withholdings too. We're simplifying the kind of payroll entry here, but we would debit wages expense. Here, we're not debiting the expense. And that's kind of the tricky thing that we're going to have to see a few times over as we go through a manufacturing company. And that's because of the matching principle. We haven't used those wages to help generate revenue yet. They're going to help us generate revenue in the future. When we finally sell the inventory, we will expense it in the form of cost of goods sold. So the value of that work is going into the inventory, which is currently in process and therefore going into work in process. So let's record that out. Here's the work in process account. It's going to be 1, 2, 3, 4 accounts down here. It's going to be 4 accounts over on the GL then. We're going to try to just scroll back and forth. If you want to make the screen smaller, that can help to record. I'm going to try to keep it full size and use scrolling to do this. We could also freeze the panes, but we'll do it this way. So we're going to go to work in process. Here it is. We want to be in the debit. We are in cell S10. I'm going to say equals and point to that 4,200. And that's going to bring the balance from 2,230 up by 4,200 to 6,430. That then is being used to create this trial balance number, and we're out of balance by the 4,200. Then we'll record the other side of this, which is wages payable. That's going to be our only liability account. It was a pretty simplified trial balance, but there's our wages payable. We're going to scroll over to wages payable. It's going to be a credit. So here's wages payable. We're going to be in the credit side. I'm in X19. So within X19 equals, I'm going to go all the way to the left until I find wages payable, the last journal entry, 4,200, and enter. So there it is, wages payable, 4,200. This number then being used to create wages payable here, and we're back in balance. So our journal entry is back in balance and has been recorded here. Okay, so there's our process. Now, once again, we did something to work in process. And whenever we do that, we need to support this not only with the GL, as we have here, but this only gives us the detail by date. We need to break it out by job. And remember, it's similar to like the accounts receivable being broken out not only by date, but by customer who owes us the money. Work in process needs to be broken out not only by date on the GL, but by job. Which job are we applying these costs to? So if we do that, that's where we're going to need this separate breakout here in the sub account. So I'm going to go ahead and copy this and we'll bring it over. I'm going to go all the way to the right to where our jobs are. So here's our jobs over here. And I'll paste this down here. Okay, so now we're just going to apply this out. That 4,200 is broken out, job B15. we're in B15 direct labor, and we're going to say this was 1,200. And then B16, 900. Here's B16 direct labor, 900. And then we're going to say B17, 560. B17, 560. And then B18, 850. B18, 850. And finally, B19, 690. So we're going to go over here to B19 and say 690. Now, if we add up our total jobs, they add up to direct materials, direct labor. These two add up to 1,230, being summed up across, being summed up vertically. Here's our total 1,230. That's the case for all jobs. If we add up all of them, they're all open. All these jobs, we can do it this way. All these jobs add up to this amount. That should be equivalent to what's on the trial balance and GL. So we can see over here, we noted that this work in process was used to create this number, and this number should be supported by this number and by the work in process, the jobs, and it is. So we look good there. The last piece of this then is we're going to record this amount. This is the indirect labor, and that's going to be anything in the factory that we couldn't apply to a job. So if we have like supervisor salaries or something like that, we don't know which job they actually worked on, if any. So they're working on multiple jobs. So we have to basically apply their salary to those jobs. If it's a maintenance or something in there, we might need, if it's anything that's in the factory where we make things, if we're making guitars or whatnot, we need to be able to apply those salaries out to the jobs. So that's going to be the indirect labor here. So it's still going to be wages payable because we're processing payroll, but the debit now not going to work in process because we don't know which job it's going to. It's going to go to the bucket, which is factory overhead. So we'll right click and copy factory overhead. We'll put that in B13, right click and paste 123. And then the amount is going to be 1,200. We'll credit something, run 1,200 as well. I'm going to do that with a little like negative of that number, the like negative plug formula. You could put just a negative 1,200, that's fine too. And then that's going to go to wages payable. Again, it's kind of like processing payroll, like we could have said paid cash. We're not dealing with any of the withholdings here. We're just having a simplified payroll journal entry. Rather than debiting expense, however, it's going to an asset account, an inventory account, in this case, overhead, until we figure out a way to apply that overhead to a job. So we're going to right click on wages payable. We'll put that in B14, right click and paste 123. And there we have it. Now let's record this one. We're going to post it to the general ledger. Here's factory overhead. Here's factory overhead. It's like the third to last asset account. Same order on the GL. So factory overhead is down here. So it's right there in S26. So within S26, I'm going to say equals, go left. I'm going to find that last account. There it is, factory overhead, and pick up that C13. Enter. So within S26 equals C13, bring in the 550 previously in there up by 1,200 to 1,750. That 1,750 then is being used to create the trial balance. We're out of balance by 1,200 until we record the other side. So here's the other side. Wages payable. It's our only liability account, which is nice in this nice small trial balance. So we're going to go find wages payable. There it is. It's going to be in the credit side again. I'm in X20. X20. I'm going to say equals, and then we'll scroll left and find that account. So we're scrolling left. Wages payable. We'll pick that up in D14 and enter. So here's wages payable equals D14. It was at a credit of 4,200. It goes up in the credit direction, 1,200 to 5,400. That then is used to create the trial balance, and the trial balance is back in balance, debits equaling the credits. Debits minus the credits equals 0. Still no effect on net income here. And again, even though we kind of paid wages, and you might and are thinking, if we've thought about companies other than manufacturing companies, is probably that there should be an expense related to wages expense. But no, there's not an expense because that was part of inventory. Anything that we had to pay for in order to conform or convert the raw materials to inventory is not an expense until we sell the inventory. It's part of the cost of inventory. For more accounting information and accounting courses, visit our website at accountinginstruction.info.